There we go. Now it's working. Good morning, good morning, good morning, everybody. Good morning. We are live. It is time. Today the market needs to choose. Today the market needs to decide if it's serious or if it's playing around. Was yesterday a dead cat bounce or was it not a dead cat bounce? That is the question that the market needs to pick. And we are going to find out today. That's it. Today we're going to find out. I mean, we kind of have to find out. Midwest Cannabis, hello, hello, hello. Thank you for being here. We're going to give it a minute. Let me tweet out this link. Live streaming the United States stock market open. Boom. Twitter. Why is Dogecoin trending on Twitter? What is going on with Doge? It's like, what is going on right now? All right. Hello. Good morning, Range Rover. What's up? Morning, Mad. Yo, Alfonso. Zach Wolf looking yellow. Yes. I hope the market looks green while I look yellow. Hi, Amit Luca. What's up? Morning greeting from SG Low. What's up? Good morning, Pound Squad D Williams. It is time for rally mode, man. I'm tired of this, David. Hey, man, I feel you. It's a question of if it's going to happen. It's a question of if it's going to happen. So right now in pre-market, everything's holding up. Nothing is kind of crazy. I mean, futures are down, but it's not like insane, right? S&P got to 430 last night, went pretty well. Dow futures fall 100 points. Like 100 points is not that crazy. It's not a big deal. So, like, I'm interested to see in 6 minutes what happens with the market open. Like, what actually happens? Because, you know, as of now, we're seeing that things are... Oh, hold on. Let me zoom out of this part. As of now, we're seeing that's like it's doing pretty decently, right? From just a pure market open, from a pure charts perspective. Nothing's crashing, right? Like in pre-market, you would think there's a massive sell-off. Nothing's crashing. So it's like, all right, if nothing's crashing, then theoretically, we should be okay. Palantir's down 1% in pre-market. That's not crazy. Netflix up a little bit in pre-market. You know, yesterday we had some amazing. Ethereum is up. Bitcoin, where's Bitcoin? Because Bitcoin was doing pretty decent, I think, last night to some extent. Yeah, Bitcoin's hovering around 40,000. People are saying by April, Bitcoin's going to be at 50. And I'm like, I don't know about that. I don't know about that. For Bitcoin to go up to 50 would, I think, take a little bit of time. Okay. You're expecting another letdown before a real bounce, Fox? Yeah, I think that is too. Is the Chinese COVID outbreak going to push inflation higher or lower? Does China have more supply? So China, for people who are not familiar with what's going on in China, there is another outbreak that's going on in China right now. And that is a COVID, I believe, BA2 variant. It's another like Omicron variant of COVID. China has shut down a couple of different cities where the virus has started spreading. And given they are not a democracy, you do not need Democrats or Republicans to agree. There's no political discussion. They just shut stuff down. And so they're trying to stop the spread. Now, it's not really indicating that that spread is going to be anything super substantial, which let's hope it's not. I mean, that's kind of the argument. If there are some certain ports and sort of manufacturers and OEMs that are going to get shut down and supply chains are going to suffer, it just shouldn't be the most substantial supply chain like issue that existed in 2020. But ultimately, we're gonna see, you know, how that turns out. Amit, bro, you look stoned. Wake and bake, right? No, I'm not stoned. I'm not stoned. I was live streaming last night, late night stock talks, live streaming in the morning. Grind. What's happening is the grind. I got Victor Drew says I got a bad feeling I'm going to sell early and see if I can make a quick swing trade. I could lose money, but love to live dangerously. And Robinhood swing trading is my drug of choice. I don't know if you're being serious on that, Victor, or you're not being serious on that. 3 minutes till market opens. If Palantir closes over 12 tomorrow, I'm going streaky. Man, that's wild. Good morning, fellow investors. Supplement. What's up, Seattle? JCB. Warby Parker is crashing. Who bought Warby Parker? Who actually thought it's a smart idea to buy an e-commerce glasses company? Just let me know, please. Like, I just want to know, because when I saw them going public in the middle of the pandemic or 2021, I was like, why is anyone buying this stock? Yeah, it IPO'd around $50. This is stupid. This is a direct-to-consumer glasses brand. Like, it's not that that's not a good business. It's just that it's not a software business. There's no margins in that. I think Warby Parker is going to be around a decade from now. Like, maybe. But, like, if you're investing in, like, an e-commerce brand, that brand has to have, like, real, like, I would invest in something like Adidas, for example. Like, that's a real e-commerce brand to me. But, like, Warby Parker? Glasses? Eyeglasses? Really, bro? Overcharged they probably pay like 2 cents to get them in China. They charge them for like $200. That's like I don't like that's I don't know, maybe businesses like that I'm totally turned off by. I'm like, in the public markets, why would you invest money in that? There's so much other better stuff to invest in. All right, we have a minute before market open. Angel, blah, 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 blah. Yo, Mitt, you own some Neo stock. I don't own Neo. You know, I had Neo at $3. I was buying Neo in 2019 for like when it was $1.22 because I thought it was cool that it's a dollar stock. And I sold at $6. I could have sold at 60 and made like 20x my money. But you know, alas, that's kind of what happens. Imagine still using Robinhood in 2022. Yeah, I still do it. I don't care. I bought the glasses, not the stock. Yes, that's what it should be like. I bought the glasses, not the stock. Good morning from Germany, Power Napster. What's up? By the way, guys, get ready. Cowbell. People know it's coming. People know it's coming. Rose, she knows it's or they know it's coming. It is here. Market is about to open. Here it goes. The market is indeed open. Boom, baby. Watch list. What we got? What do we got? What do we got? How bad is it? How bad is it? What do we see? Let's see. I mean, there's some red, but there's not a crazy amount of green either. Oh, wait, hold on. Oh, I was up like to like $700 and I just went back down. So Palantir is at 1172. Okay. Tesla my Esla. Ooh. 830. Not crazy. You have to take your AirPods out for that bell. I love it. That bell is gonna everything. Good morning from Istanbul. Shout out Boris for being in Istanbul. That's amazing. Yeah, let me guys know if the volume isn't that good. I don't know why people are saying the volume isn't that good, but let me know. Maybe it's on my end. I feel like it should be fine. The volume's always supposed to be fine. All right, Tesla's at 831. We're gonna see how Tesla recovers. What do we got? AMD. AMD was close to going under 100 the other day. It's at 111. Open Door, this bad boy has to recover. I mean, Open Door should be like a 4 or 5x bagger if they actually pull it off, especially at these depressed prices. I mean, it was at 25. It was at 25 in October. It's at 7. Goes back to 25. That's almost 28 4x bagger. Interesting to see it there. Amazon, wow. Amazon sustains 3,000. Now, why is Amazon so important? Because Amazon got that boost from the what do you call it? Buying the thing. Showing that they're going to do a stock buyback and buying the thing that they did their own buyback of their own stock. $10 billion. So Amazon sustaining itself. Coinbase 169, almost 168. Interesting. Rivian $40. I don't feel bad for anyone who bought Rivian on IPO. I don't get that. Hold on. Someone says volume a little low. Let me test real quick how low the volume is. Give me 1 sec. $10 billion. The volume on God, that's so weird. The volume on my thing is like pretty amazing. All right, I'm gonna make one change and let me know if you guys think there's a difference. Um, I'm going to. Okay. Let me know if there's any difference here. I'm talking now. Let me know if there's any difference. Let me know if there's any difference. Because I'm changing one thing. We're going to do this for 1 minute, then we're going to get back to market open. Just so you guys have a better experience here. Any difference with this? If not, I have one more choice. I think there's a system output that I'm not doing. That's really weird. Like, the volume should be phenomenal given yeah, it's the right volume on this microphone too. Okay, set. This should volume absolutely fine here in Glasgow, Scotland. Okay. All right, cool. Let's get back to this market open. All right, so if it's still bad, I'm sorry about that. I'll make sure to fix it for tomorrow, and I'll figure it out. All right, what else do we have going on? SPY, S&P 434. So S&P is holding up. S&P was at 417 like 2 days ago. So I am really happy with SPY. It's holding up well. Remember, people are saying the bottom for the S&P should be 3,800. Okay, so we have another around, what is it, 50 basis or 50 points to drop $50 from right here if it's going to go lower, which means there's going to be a lot more pain in the market, right? So I think from that perspective, S&P is holding up very fine. Fourth, Palantir. Oh, Palantir's at 1190. Wow, Palantir recovering. Palantir closed yesterday around 1190 as well, so that was pretty decent. I think your nose is blocked. Yeah, that might be the reason. Palantir holding up really well, guys. You want to know what's crazy? My biotech. Okay, I invested around 20 grand into a biotech. It was up 15% last night. So, and I have 3,000 shares of that company. Yesterday was an awesome day, and it's holding up. My biotech's holding up as well. So my biotech hasn't sold off yet, which is amazing. Roku 114. Kathy needs to get this bad boy to go to 490 again. So good luck. Good luck, girl. Especially because you sold Palantir for it. Arc is becoming a tragedy to look at, to be honest, because they need to go back from 59 to 160. I mean, I think they can do it. I just don't know how long it's going to take for it to happen. But you know what I'm realizing about ARK? I realize the market just doesn't like ARK. Like, the market just doesn't like the sentiment has changed. And it's not just because of growth being undervalued right now. It's like the market just doesn't like ARK and the stocks in ARK. That's why I'm ultimately happy that Palantir got out of it, right? The market's just not that into it. They're not that into it. All right, I want to play a clip real quick from Dave Lee. He just did an interview with Puru Saxena, and this guy is a FinTwit. I guess you could say FinTwit is a financial Twitter guru, you could say to some extent, who theorizes a lot about the market. And I wanted to give his thoughts. He was a private equity manager in Hong Kong. He's now retired. Now he just does private investing on his own. And I wanted to play a moment from when he's talking about what to expect for the bottom, right? Like how do you expect when there's going to be a bottom? I think it's a really interesting part of the conversation. Let's listen to it real quick. Volume should be fine. Let me know if it's not. His volume was a little bad on the podcast himself, so I can't do anything about that. But let me know, and then we'll go through. There's a really important clip to me.
Reversed. So it is only logical to assume that the inflation rate will also come down quite sharply this year.
Got it. In terms of indicators, what are you looking for or looking at to determine the bottom? Like if certain X, Y, and Z happens, like you think that the indexes have reached the bottom, what are those indicators?
Well, at the index level, there are a few things I'm tracking. One is the volatility index, the VIX. And if you pull up a chart of the VIX going back 20 years, all the major bear markets or corrections.
The volatility index in the market kind of shows how volatile the market is. And the higher that volatility index is, the worse it is for markets, because that means that investors are less likely to buy stocks because it's too risky to ultimately put their money into the market versus something safe for like bonds.
Sort of top or bottomed or ended with the VIX spiking to around 45, 50. During the global financial crisis and the pandemic crash, the VIX reached to sort of 80 or 90. I can't remember the exact figure at the top of my head, but it went as high as 80 or 90. during the other QE-related bear markets, whenever QE ended post GFC, the VIX basically spiked temporarily above 40 to almost 48, 50 or so. This time around, we haven't seen that yet, so we haven't seen the widespread panic at the moment. And even if you look at the put and call ratio, the put-call ratio also has not so far reached the extremes which were seen during the previous bear market bottoms over the last 15 years or so. So these are two indicators. I'm also looking at the valuations, i.e. the forward PE multiples for the NASDAQ and the S&P. The S&P is currently trading around 19 times forward year-end EPS or earnings. The NASDAQ is now trading around 22 or 23 times year-end earnings. And if you look at history again, and that's all we have in this business is history.
That was a good point that he mentioned. Like, all we have in the stock market business, if your business is buying and selling and trading stocks and finding good stocks to put your money in, all you have is history as a macro level indicator for what's going to happen. And I mean, in history shows the market continues to go up even with geopolitical events. I mean, everything that's going on, Russia, Ukraine, the market is not really sold off from it. It was a little dip, and we're just keep going further and further, which is what happened with Crimea in 2014 and the annexation. In fact, there was barely any sell-off. We went from like 170 to 190 in the matter of 4 or 5 months on the S&P. So history really is an indicator that like we may be coming to the bottom soon.
The bear market ended after the global financial crisis in 2011, 2015, 2016, 2018, and then the COVID crash. The S&P bottomed with their forward multiple around 15 or 15 and a half or 16. And the NASDAQ bottomed around 19 or so, 18 or 19. So if, you know, the equity risk premium sort of blows out a little bit more and the long-term interest rates go up a little bit more, it is conceivable that, you know, the multiples will come back down to those sort of levels, and which is why I think that there is still a risk of another 10-15% decline at the index level. And also, if you look at the market's technicals, and if you pull up a weekly chart or the monthly chart of the S&P or the NASDAQ and plot a 40-month exponential moving average, you will see that each bear market in the last 15 years or so.
Yeah, I'm sorry guys for the volume. Let me check one thing real quick. All right, let me know if there's an echo if you do this or if it just gets better. We're going to do it real quick. If it doesn't work, we're just going to move on. I'll fix this tomorrow.
So, or the last 12, 13 years post the global financial crisis, bottomed with a brief trip to the 40-month exponential moving average. And that right now is around 3,700 on the S&P and around 11,700 on the NASDAQ 100. So from a technical perspective, a fundamental perspective, and also sentiment point of view, I still think that there is another 10 to 12%, perhaps 15% more further to go on the downside before we will see the ultimate low, at least for the indices.
Yeah. I mean, would you, okay, so, okay, let's unpack.
Okay, I think that's way better. I think that's way better, actually, right? All right, so I turned one thing on, so that should be way better. Let me know, though. It's the last 2 minutes of this.
A few of these things. So for the 40-month exponential moving average, you say historically that has, signaled the bottom. But, I mean, is there anything special about that? It just seems like, it's just a technical indicator. It could have been something else. And, history can rhyme, but oftentimes it's not, exactly, it doesn't match perfectly. So, I mean, what's your conviction in terms of this 10 or 15% extra drop?
So for those who unfortunately just couldn't hear because of the volume for the past 2 minutes, he's basically saying there's 10 or 15% more left to go. Puru thinks 3,800 is the bottom, not 4,300 on the S&P. He thinks that's a little bit of a correction. That's not exactly what we need to get things going. As we were talking about yesterday, sometimes things got to go down in order for them to just start going back up, and it's healthy for things to go down. So Dave's asking, like, what is your conviction? Now, obviously he mentioned in the past couple minutes history and sort of macro level events, and that, like, this sort of is retracing back to the mean. So he's doing some technical analysis, but now Dave is like, what is your conviction for this?
Is it something like you're 90% or 80% convicted, or like how are you viewing kind of the odds for that?
I mean, I think there is probably, if you were to put a gun to my head and ask me to put a number, I would say, there is probably a 75-80% probability that we will still see this final washout because I find it very hard to believe that, after the mania that we saw, the euphoria we saw between 2020 April to middle of last year, the massive insanity that we saw on the upside, and the market clearly short up and overshot to the upside, that the correction would be muted. Normally, if you have excesses, extreme excesses in one direction, they're usually corrected by extreme sort of, corrections on the other direction. So the markets tend to overshoot in both directions. And given the very high CPI print and the very severe monetary tightening which the Fed has now embarked upon, they ended QE very quickly within 4 months, which is unprecedented. In the prior QE cycles, they were much more gradual in their approach, and they took a very long time before they ended QE. But this time around, they had to do it very, very quickly because of persistently high inflation. So if you look at the extent of the magnitude of the tightening which is currently taking place in the US and the elevated multiples, I find it very hard to believe that the Nasdaq will bottom with a forward multiple of 21 or 22. I think there's more pain to come over the next few weeks.
So the Nasdaq right now is a multiple of around 21, 22. He thinks that because of the liquidity that was pumped in 2020, because of the liquidity pumped into 2020 and 2021, he thinks that mania has to have a response to it. And it's kind of like this idea of giving stimulus checks, right? It's like there's no money that's actually free. Like once you see inflation go up 8%, you look at those, $1,400 you got from Biden, which I got as well, and you're like, well, that $1,400 is worth 8% less. Like, was it worth getting those $1,400? So his argument is like, well, there's mania that happened in 2020 and 2021. That mania has to be accounted for. The Fed now has a lot more interest rates hikes. They're stopping quantitative easing at an unprecedented rate, meaning they're just like cutting it off relatively quickly within the year, which means they're going to stop buying things. That money is going to stop going to into liquidities. They're just going to stop buying bonds. They're going to start selling things. There's quantitative tightening. They're going to become a little bit more conservative in terms of how they think about the economy from a macro perspective, and they're going to try to destimulate the economy, right? So his argument is like that requires intrinsically a strong level of more pain, which is the 3,800 mark to him. And it requires a value compression of the forward PEs of the entire NASDAQ, which means that everything is going to drop if the NASDAQ goes down for another 10, 15%, or a little bit even more than that. I think 20%, going down to around 3,800 on the S&P. So the sort of past history is what he's looking to when things get really hot. How do they come back down, and when do they come back down? And I don't want to say I agree with him, but like I also think like it would be kind of weird to have the insane market we had. So we got to 480 on the S&P last year, 479 we ended, and then for us to just go to 430 and for us to just start running back up. Like it doesn't seem like that's natural. It seems like that's still artificial. And if we go down to 3,800, that means that everyone's stocks, whatever you have, is in pain. Now, could the market just sustain itself with pure growth and not have to worry about, it to just keep going? Maybe, but I don't know. We're going to see. In other good news, Palantir's at 12. I'm seeing in the chat. Let's look at that. Woo! 2%. Not bad. Every dollar Palantir goes up, I get $2,000. So that's kind of cool. Nice to see little old Palin doing decent. Exciting news coming out tomorrow for the Palantir community. I think you guys are gonna enjoy some of the stuff that comes out. But yeah, very, very good on Palantir. SoFi, still trying to get up to $10, man. SoFi, I'm starting to really like this company. Not yet ready to buy, but I think they have a lot of runway, a lot of chances. Also, by that way, Puru, that guy who was talking, Snowflake is one of his top convictions. And also Palantir is one of his top convictions. He has Palantir and Snowflake as like, he's big on Twitter if you just follow him there. So he has a lot of different conviction on those stocks. So that's interesting. I wish David asked him about Palantir specifically. He didn't ask him too much about it, but Palantir is one of his biggest positions. DocuSign, 84. DocuSign has just had been crushed. It's trying to find some headwinds for itself. Owen said, why are you saying you're having a good day? It's 13 minutes after open. First of all, every day is a good day no matter what. Whether it's 13 minutes or not, 13 minutes after open. Netflix. What? Oh, do you guys want to see the news that's happening with Netflix? This is actually amazing news. This is what the news that I'm about to show you on Netflix is going to make it a $10 trillion company. And I'm serious about that. That's why I'm probably buying the stock very soon. It will likely become a $10 million company. Not 10 million, $10 trillion company. You guys want to see this? Let's just watch this lady talk about it. It's good. Let's close the ad. I don't even want to say it for some of you know it, some of you don't know it, but it's good. It's good. There, like this right here is going to become a $10 trillion company as a result of this. As a result of this, I'm promising you, not financial advice, but it is going to become a $10 trillion company. I'm making you do a portfolio review, like what you own in terms of stock. I just own one other stock. It's called PPBT. It's a biotech, and it's up 15%. My portfolio is so bad. It's like Palantir and a biotech. It's not diversified at all. All right, let's watch this.
If you share your Netflix password, you better listen up. The company said it is testing a new fee for account holders who want to share their service with people who live outside their households. 2 new test features are rolling out in Chile, Costa Rica, and Peru. They're called Extra Member and Profile Transfer. Extra Member is for people who want to pay to add an account for up to 2 people they don't live with for a fee of less than $3. The profile transfer option is a simplified way to split off the accounts of freeloaders without losing viewing history and save shows in an effort to try and encourage password borrowers to sign up for their own subscriptions. Now, this is where it gets interesting. How do they figure it out? We were just having this discussion. How do they know that it's not you traveling or at a vacation home? Or, like, if you're a college kid, I guess you have to pay for the college kid if they're away 7 months?
So what they're going to do, Netflix is going to, like, if you're sharing your password with someone else in, like, a different state, and Netflix knows that it's your account that's being used, obviously, because they can tell, they're going to charge you a fee. So they're not going to charge that person the $16 a month because they know that person's just never going to use Netflix, and, like, that's not attractive to them. But they can charge you, like, another $2 a month to lend out your password or whatever. And this is probably beneficial for, like, parents with their kids or friends with, like, I'm confused who would pay for this. Like if you charged me money to lend out my password, I would just tell the people I was lending my password to, no, you're not getting my password. But if the password stealing of Netflix, and by the way, I steal someone's password for HBO Max, so it is a thing. It's a real thing. It's a thing. People don't want to pay that $15 a month. Someone said, yeah, I will cancel my Netflix if they do that crap. Yeah, I mean, like, if they do that, I think they become a $10 trillion company. Okay, obviously I'm kidding, but, like, could you imagine, bro? Like, could you imagine they implement this and they show next quarter's revenues and, like, Netflix is right back here at 500 just because they implemented this? Boom. Like, the euphoria that investors have. Netflix all-time high was 700. I really do think this was hype. I don't think Netflix gets to 700 again. Ever. Put it out there. I don't think Netflix can do it. I think Palantir gets to 700 before Netflix gets to 700. Like, what is the mode of Netflix? Please tell me. Like, they have none. People who buy it, whenever people buy it and ask, okay, so what, like, everyone wants to give me this argument about, oh, they're gonna penetrate consumer this, blah 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 blah. They're undervalued. I'm like, okay, but what good content do they have? And that's when people shut up. And you can name one-off isolated events, but you can't name a sustained catalog of content. You just can't. And with so much competition for content, it's like, so what's the moat? Like, what's the angle here? Why are you putting money into this company? Like, I don't get it. I do not get it at all. I am staying away from Netflix stock. There is no content moat at all. Let's go to financials. How are financials doing? Where is JP Morgan? There we go. Is that it? I hate, like, when you type in the name of what you're looking for, you get all this like, no, I'm looking for JP Morgan. Now I gotta go to Google. JP Morgan stock. What? JPM. Okay. JPM. There we go. 137. Now JP, let's go back to COVID. COVID, it got down to $82. It was at a high of 140. So it was basically in February 2020 where it is right now. February 2021, it ran to 172. Now it's down to 130. So it's right back where it was around January 2021. Interesting. Okay. So financials are interesting to me right now. Wow, Palantir is 1208. Not bad. Palantir's trying to crack that 13, baby. Not bad. Financials are interesting to me right now because with higher interest rates, it's like a double-edged sword for financial companies or banks, right? Because they can charge more, or like they will make more off a transaction because the Fed's fund rate is higher. So like if you're getting a loan from the bank, interest rates are higher, you have to pay more interest. Pretty simple, right? Bank makes more money. Bank can take that money, put it in more places, and make more money. It's kind of the craziest business model that a bank has. Like they literally make money off of just investing other people's money, and they have a reserve amount of money so they can guarantee they can give you back your money. Like it's actually the craziest business model ever. Okay, so that's one thing. But if less people are spending or buying houses, for example, because the interest rates are up, then that means you have less volume. So you have more off of the transaction because of the interest rates being high, but you have less volume coming in because people are less likely to purchase big things, take big loans if there's higher interest rates. So it's a unique element for how banks work out. Let's see how JP Morgan did in 2008. What happened in 2008? So here we go. 1999, JP Morgan was at 56, and we got down. 2007, but right before the crash, we were at 52. Bottom of the crash, JP Morgan got all the way down to around 18. 52 to 18. How long did it take to get back to 52? So here, we're in the recession. We're coming up. We're coming up. We're coming up. We're going down. We're coming up. We're coming up. So right here, 54. Wow, you have 2013. So JP Morgan was at 2013 in 2000, or JP Morgan was at 52 on April 30th, 2007. It took JP Morgan 6 years to get to 52 on July 28th, June 28th, 2013. And that's the scary part of a recession, because if the S&P really does drop to 3,800, how long does it take for it to be able to get there? So in a recession, when interest rates, when things were going bad in that recession, and when there was more stimulation going on, and interest rates were actually lower, JP Morgan was getting hurt. Now, if we look at 2020, JP Morgan went from 130 to 97, still a dramatic drop, but within a year, it got back to 130. And the weird part about this macro cycle is then it got to 180 further in that year, but that further half of the year was just way too much hype, liquidity, and it had to come crashing down. So the question is, let's say the bottom is today, right? 137 is the bottom today, and we start trending upwards. How, where does JP Morgan go as a growing stock, even though the market is like not in a recession anymore, but interest rates are getting higher because we know we're going to get at least a 2% interest rate by the end of 2022. The interest rates decisions, by the way, that came out yesterday, I didn't really cover it too much in this live stream because I think everyone knows what happened. The FOMC decided that they're going to have a 25 basis points, so 0.25%. Look, it's not enough. The market didn't react to it, and stocks are up right now. Palantir at 12.13, beautiful. The reason markets didn't care is because they factored that in, right? And Jay Powell did not say anything that was fundamentally crazy. The question is, for the next level of basis points, how much is the market going to agree or disagree with how much it should go up? Is it going to go up to a much more larger rate, or is it not going to go up to a much more larger rate? And that's going to be the question. Like, are there going to be multiple more basis points to the point where we get to 2.5% by the end of the year? I think the market is comfortable with 2% by the end of the year, but I don't think they've baked it in yet. Meaning they know we have to get to 2%, but they're not comfortable we have to get to 2%. By the way, interest rates for American debt are not good. America had to pay around $560 billion of interest on our debt last year. Our debt is some $20 trillion. And that was with like 0% interest rates. So every dollar we increase it, it's hundreds of billions, or every percent increase, hundreds of billions of interest. So it's not good for us to increase the interest rates, but we have to stop inflation. And we're hoping that the PPI, the Producers Price Index, peaking or coming in lower than expectations shows that there's an inflation peak because producers have to spend less. They have to charge less for the products that they're creating, indicating that consumers have to pay less, right? Because producers don't have to charge that much. That is sort of the relationship that's going on with the PPI and the CPI right now. And as a result, if 7.9% inflation is the peak, which I don't think it is, but if it is, inflation should be coming down and the Fed doesn't have to be as hawkish because the whole point of interest rates is to get inflation to come down. You have to protect the value of your dollar. So if you can't protect the value of your dollar, there's not going to be any true, value there. Tom said, bring me on in 30 minutes. So Tom, hold on. Let me go through this message. Palantir, what's up? Awesome. I didn't even see Tom in the chat. I was too busy talking. Thank you, Tom. Oh, let me do this real quick. I got to show this real quick. So Tom, I don't know if I can have you on in 30 minutes because I'm about to be out because the live stream's about to be over, but let's see if we might keep it going. Do you guys want Tom to come for 30 minutes? Do you guys want to wait 30 minutes? Everyone needs to check this out real quick. Okay, this is Sense Invest. I co-hosted a show with Tom. Some of you may know his new show is called Money Talks. I need all of you guys to go like this episode and subscribe to this channel. I'm going to be uploading this episode on my channel today. This, to me, has the potential to be one of the next best debate stock shows on the planet. The channel is called Sense Invest. And the thing they're trying to go after is this show called Undisputed, which is a sports debate stock show. And it's really cool. Like, it's really, really cool what they're going for. You see the graphics on this right here, and then see the graphics right here. It was really cool. So I'm gonna play my opening just to show you guys what it was like. It's like 40 seconds, and then we'll move on from there. Tom says every percent is 200 billion. Sheesh. I was kidding. You were kidding. You can't. No, I can't. I was kidding. Okay, good, Tom. Because I gotta go. I got so much work to do, bro. But we'll be talking soon, obviously. You guys will see more of me and Tom a little bit later. So, guys, you got to subscribe to this channel. I'm going to play this intro. I think this show has the potential to be the next best stock show on the planet. I'm not just saying that because I love Tom. I'm not just saying that because I guest hosted the show. I'm saying that because, as I was saying last night, there's a lot of financial YouTube out there. There is not a highly produced production. What this is, I met the staff yesterday, the background team. This is a highly produced production with personalities. Justin is also on the show. Justin's a former hedge fund guy, financial analyst, really knows the numbers of the stuff he talks about. And then Tom is this vulgar personality that also understands entertainment. And I think the combination of these two can be better than some of the biggest financial YouTubers out there, because it's not just a question of pumping out more and more videos. It's a question of a really highly produced show. If one show gets 1 million views, it's kind of better than 17 videos that get 20, 50,000 views each. Both are different approaches, but like a highly produced production. This is something that could be bought by a media network one day. Like, I could see a legitimate financial media network buying the show one day, given how strong it is. But I don't think they would sell, because I think the show has really good potential to go independent. So everyone definitely subscribe. Let me play you guys a minute of my intro just to show you guys what it was like, and then we'll
Welcome back to
All right, here it is.
Welcome back to Money Talks, where if you listen to Tom over the past couple months, you would think Chinese stocks suck. But if you had Chinese stocks in your portfolio today and you woke up in the morning, you would be like, what the? I'm your host, Amit, filling in for Justin O, because as you know, nothing must stop the show. I'm here with Tom Nash, whose takes aren't that trash, but if you listened to him yesterday about China, you wouldn't have made a lot of cash. In today's show, we're going to talk about why Chinese stocks are soaring, what to make of the FOMC rate decisions, the Ukraine president asking for more US aid, how A-Rod's new stock project is going to affect athletes, and much more. We'll be right back. All right.
It's dope, bro. It is dope. It's dope. Definitely subscribe. Please like this video, because I think this was a good one. Listen to it. I mean, don't like it. Listen to it if you liked it. Listen to it, and then if you liked it, give it a like, and check it out. I think it has some really, really big potential. They're doing some big stuff over there. They're trying to do YouTube a little bit differently. They're trying to stand out from the noise, and I think there's pretty massive potential there. All right. So yeah, what's going on in the markets right now? Let's go to Palantir real quick before I head out. 12.12. Goodness gracious. Did it hit 12.24? Oh my. We hit 12.24? Oh my. Oh my. We're up 4% on the day. Yesterday, we were up 10%, so we're up 14%. Oh my. This is not bad. This is the day that I like to see. I am happy to see this type of a day. This is a very good day. I hope everyone starts the day off well, knowing this is happening, and hope we don't plummet back down. But look at this, 12.20. So is this a question of all stocks or is this a question of Palantir? Is there something happening with Palantir? Didn't put out a PR or anything, even though they're putting out a lot of content. So, going to be interesting to see kind of what goes down here. You want to add to that Peru Saxa interview, Chamath said that the sentiment exists among the people he speaks to. They both believe indices will drop, but growth has found its floor. Yeah, I agree. That because if indices drop, but growth has found its floor, then there shouldn't be, a unique reason why that's happening. Sorry, guys, I wasn't on the chart. So there's Palantir. Amazing, amazing, amazing stuff. Looking nice. Owen says, look at Upstart. Oh, I also got to look at the Chinese stocks. Okay, Owen. Thanks for taking advantage of people with predatory lending. I hope you're happy. 114. Baba. Is Baba going up? Guys, I don't know if I haven't checked Baba all day. Here we go. Drum roll. Okay, it's down 5%, but it's holding up. Like it's not like it's not holding up. Hold on, where's the 5-day? So it got to 105. Yeah, I mean it's up from there, 76 to there. So it's like not horrible, but it is down today. All right, guys, I got to get out of here. Got a lot of stuff to do. I'm working on a really good project to launch tomorrow for the Palantir community. You guys are really going to enjoy it. It's going to be a banger. I hope it's fun. Thank you guys so much for watching. Patreon in the description if you want to check it out. Get access to the Discord. Please subscribe to Sense Invest channel. Please like this video. I will see you guys tomorrow. Cannot do late night stocks tonight because I have to get this project done for the Palantir community tomorrow, which is going to be a good thing to launch. And as always, enjoy your day. I'll see you guys on the next one. Bye-bye.